far it's been a challenging morning, but maybe we'll have a chance to test the highs here if we break over this 83 area. Test the 90s for resistance, 1400 area. Well, it looks like finally we got the direction right. Now it'll be interesting to see if we rotate back down to the point of control or if volume keeps coming in. We have a good delta volume and we have a good NYSE tick volume, and we're building a higher volume on each leg up from the 76 area. Oh boy, what a day. Short from 80, reverse, long from 81.50, reverse, short from 78, reverse, long from 80. It's like, oh man. Perfect recipe for losing trades, being late and early on the entry, on the reversal entries. So we'll be patient here and see if we can't maybe jump up here and test resistance. On most of the multi-day distributions, we broke out over the balanced 3-day distribution. The 5-day distribution was not that balanced, but the 20-day distribution is balanced, and we're right in the upper limit of that area. Actually, we broke out over the upper limit of that area, and the 30-day distribution is balanced with a couple nodes, distribution nodes, and we are about to break out over that. The breakout line on that is 88.50. So it seems like the market's attempting to go higher, and we'll see if the F period can get up to the 90 area, see what the 90 area, the 1400 area holds in store. We had a little short-term signal. We could have got out up here in the 84s and locked in some profit, but you can see here with this price block, with the cursor, this price block, a lot of activity there, and the price is moving down, so I don't think there's a huge opportunity for a retracement here. Most of the NYSE tick volume has been above the zero line in the over the day, and we're making higher highs and higher lows. So we're just going to stay put with our position here. All right, the G period broke over the E period high. That's important. So here we go. This 86-87 area from February 26th, I believe, is right in the middle of. We're right in the middle of a big two-sided trade. February 27th. If you look at the volume and price chart, you can see there's some blocks of volume from 84 up to about 88, and we're right in the center of that now. So if this two-side trade gives way, it'll be real interesting to see if we have enough momentum to get us past 90 up to 1400. If we get up that high, then I'll be looking to exit this trade. So. I might even exit the trade, you know, if there's a sign earlier, but so far everything looks good for a long. We're going to move our stop down to the F period low at 83. Or I should say move our stop up to the F period low at 83. The XLF is leading the way. It's diverging from the E-mini S&P. The XLF made a higher high before the E-mini S&P. And the volume coming in on this up leg is 35,000. So we're making higher highs and higher lows across the board, all the way from the 10:30 period, the C period low. C period ends at 11 but starts at 10:30. Well, what a nice position to be long there. The C period low is 76.50, 77. The best long position we had today was 81. Well, actually 80 where we're in now. The previous was 81.50, but that was before we made the low at 76. So we'll just stand tight here and see if we can't get up a bit more.
Guilty enjoying life in the 20th century? Are you out of your fucking mind? The wrong century.
We have volume coming in here, which is good. G period is making higher highs.
The walls close in the suffocation. You ain't got no friends, and all the others that hate you. There's a life you believe you gotta go. me straighten you out about a place I know. Get your shoes and socks on, people. It's right around the corner over by Tom Waits Restaurant. Out through the night and the whispering breezes to the place where they keep the imaginary diseases. Out through the night and the whispering breezes to the place where they keep the imaginary diseases. Now, ladies and gentlemen, scientists call this disease bromidrosis. But us regular folks who might wear tennis shoes or an occasional python boot know this exquisite little inconvenience by the name of, now watch this, stink foot. Yes, indeed. You know, my python boot was too tight. I couldn't get it off last night. A week went by. Now it's July. I finally got it off, and my girlfriend cried. She said, stink foot. Stink foot, darling. Your stink foot puts the hurts on my nose. Stink foot, I ain't lying. Can you rinse it off, do you suppose? Here, Fido. Bring the slippers, little puppy. That's a good dog. Barf, barf, barf.
Well, the volume's coming in. We're just sitting here in the 87 area, so until something changes dramatically on negative delta side, or we see something else that would scare us out of this long, I'm hesitant to leave it at 8750. I'd be more willing to leave it, you know, at 90 or at 1400. I think the destination is above us now that we've broken out on all of the multi-day distributions. And there's hardly any activity at the second standard deviation. Every time it hits a second standard deviation for the most of the day on the NYSE tick chart, it's been a buying opportunity. And we're halfway between the zero line and that deviation now, so the retracement looks like it should end significantly above the F period low, so we're probably safe on the stop. And I don't want to second guess by exiting before our stop and not having an opportunity to get back in the trade. So we'll pause the video and see if we can get up a little bit higher. Well, it looks like we're having trouble holding this area. It looks like we're going to probably get stopped out here at 83. If we do, we'll have to look to try to get back in if it can't keep over the G period low here. Hope it doesn't hit the stop and then just boom, rally. We have NYSE reaching, you know, some extremes on the second standard deviation. I hate to just, you know, sell a position out down here. This usually is an area to buy, so hopefully we don't hit the 83 stop. We'll pause the video and see though. I was sort of expecting a little more momentum to the upside in the H period. I was looking for exhaustion volume during that run, but I was expecting a little bit higher. I was looking for 36,000 on the 5-minute bar, and we only got up to about 25,000. But maybe we'll be safe here. We're gonna take the 80. Oh man, this is tempting to take the 84s because it looks like it wants to go down to 8150. But there's some volume building right down here also. That's a little bit conflicted. We're just gonna stay with the trade here, though. With it, boy, this market's just died. I'm gonna take the 84s, 85s, see if we can get a fill here. At 84.75, we'll look for a re-entry.